Hi. Happy Friday, everybody. It is Finance Friday. We are so excited to be here, as we know you are.
Oh, yeah.
This is the show where we transform your relationship with your money by giving you the information that you need to grow and protect your wealth. I am going to share this out right now. I never say that right in the beginning. Whoa, I am loud. I hope I'm not that loud. Hey, Johnny. I'm gonna share this out.
You didn't introduce yourself.
I'm Amy Novakovich. If you've never watched this before, and this is Ryan Wilson. You usually say
hi. Everybody.
And follow us on Twitter at Nova Wealth Management. Management is abbreviated MGMT. Go to our website, novawealthmanagement.com, and you can see all our other social media outlets of choice. YouTube, we put on awesome videos on YouTube, and Instagram. Definitely check out our Instagram. I need to get back on those 1-minute videos. I've been really slacking lately. Oh, it's bad. Anyway, I like to give out like a tip right away when we get started, just something that you can take away immediately and walk away with. And the question of the week that I got from a client was, what is shorting something? Like, how do I go short something? Or what is long? What is long versus short? I mean, you would think it sounds like very common sense. However, long means you own it. Short means you, how's the best way I can describe this? You sold something that you don't own yet. You're essentially borrowing money from the firm that you have your money with.
Lending.
Oh, it gets really confusing. It's called margin.
Yeah.
Essentially, you are out. You are shorting shares because you think it's going to go down. There, let's say that. If you're long something, you think it's going up. If you're short something, you think it's going down. So typically, you sell something, and this is only with equities because options, it's different. Typically, you sell short stocks, shares of stock, and then you would buy it back to close it out. So you make money when it goes down. Mm-hmm. You sold it up here, you bring in this amount of money, and you buy it back when it's down here. So most of the time people do this when they feel very negative about a stock. So if you didn't know that, there you go. There's at least a start. Might have been a little confusing, but at least now you have an idea of what short and long is.
Yeah.
Okay. Now, moving on to our exciting topic of the day, because we get questions all the time and emails forwarded from clients all the time about like their subscription newsletters or their hot stock tips, or like emails that they got that they're being solicited. And so we have 4 things that we really want you to look out for before you hit subscribe, because I've had so many people lose their shirt on recommendations.
Yeah.
Wouldn't you say?
Yeah. And just be prepared to be bombarded with emails also.
Be prepared.
Which you guys probably send to spam most of the time, even if you do subscribe.
That's true. Maybe you do.
So,
but there's a lot of people that subscribe to these services, man. I'm telling you, they think that they're going to get sound advice, and you know, you have the intention of getting a cheap. I don't want to say it's not a financial advisor, but like get rich quick type things, like really quick tips that you can do on your own.
There's a little bit of you when you do hit subscribe to those, that is like this little piece of you that's like, ooh, I'm gonna take advantage of this. I'm gonna make money, and I'm gonna, like, it's a little bit of greed creeps in. A little bit. And I don't want to say that as like a bad thing necessarily, or like, but there's a little, I think that's kind of what it tugs at. It's like, ooh, there's a chance that I can make all of my money.
Because most of them, the reason why you say that, and I'm going to skip to number 2.
Okay.
Is because most of them will say, like, want to make 300% in a week.
Right. And that's what that draws you in. And there's nothing, I mean, there's no fault if I think anybody that sees 300%, like, sure, yeah, I want to do that. But is it realistic?
No. And the issue is they're not advisors. They're not licensed professionals, which is why they can say all that stuff in a newsletter. Like, for instance, we could not say anything like that in a newsletter because we are licensed and we are regulated. So when you get emails or when you get subscriptions like that, just be aware the reason why they can say all that, like guaranteed to at least double your money, or, you know, maybe they won't even say the guaranteed, but they'll say, like, we have the next stock that's going to quadruple your investment. Like, they can say things like that because they're not regulated and they're not licensed. So it's just kind of a get rich quick thing.
So that would be a red flag right away.
Huge red flag.
Just guarantees.
Big numbers.
You know, trying to grab you with, you know, big returns and short amount of times, like, oh, you can get 300% in a weekend.
Yeah.
Like,
or they're trying to give you their stock picking history. Like, this is the gentleman that picked the #1 stock back in 2015, or, you know, like.
And those are even on like these pretty credible websites. Like, you go on yahoo.com, if you scroll down, below a stock, the ad will say, the person that picked Amazon, you know, this is his
I got one of those today.
Pick. Yeah.
I saw that today.
Yeah. So, and that's kind of
Amazon.
dangerous.
This is like buying Amazon at $3.19 was the one I saw today.
Yeah. And so you think that because it's at it's on a website like Yahoo Finance, but you have to remember that Yahoo's still an ad website.
Yeah, they make money on
and
ad
that's
revenue.
how they make their money. So even though you're on their finance where you're looking at, the fundamentals of a stock, potentially, if that's what you're doing, you scroll too many times, then that's when they get you.
A lot of people probably don't know what the fundamentals of a
if you're looking at kind of the inner workings of how a stock, a company. Yeah. So what their revenues are, what their price to earnings are, and all those types of things. If you're on there if they're looking at the fundamentals, they know what I'm talking about.
Okay, got it. That's very true. Okay, so now we can go back to #1. That was our #2. So we're gonna just call that #1.
Yeah.
So we don't get confused.
Sure.
Okay, #1 was their get rich quick. Like, they'll give you their stock tips, their history and their stock tips, and they say, and we can make you 300% in the next week, or we can double your money, or how would you like to triple your money? Like, all these get rich quick things is definitely a big red flag, because I had a client that was following religiously their recommendations and literally lost on every single one but one. She lost tens of thousands of dollars, and it was terrible to watch it happen. Terrible.
Yeah. And I think, and correct me if I'm, if I go too much or too far, but a lot of these things, when they send you these, they're buying into this company before they send it to you. So they're banking on the fact that people will follow them and go and buy the stock, which will make these stocks that don't trade usually on a very high volume. So if there's not a lot of trades happening, and they go in and they buy a stock, and then they say, hey, you should buy, this is the next big stock that's going to go 300%. And, you go in and you buy, and, 100, maybe 1,000 people go in and buy, that's going to make the stock jump in price. And so they're banking on that. It's called front running.
Yes. So now that's illegal in our industry because we're regulated. And so, like, if we even place a trade, for instance, in like one of our accounts first, even if it's not big, and then go and place it in clients' accounts, it's considered front running, and you'll get dinged for it. So these companies don't have those kinds of regulations, and so they can it's just kind of
So again, they're not. If you're getting free advice from somebody that's saying that, they're not in it. They're not out for you. They're not looking out for you. They're ultimately looking out for themselves. And so that's another way why they do that, is because they go in, buy the stock, and then hope that people follow them into it, and then they sell it and they get even more kind of profit. So
Right.
All right. Good. So now we can move on.
So #2, not individualized. So they aren't giving you financial advice. They are literally trying to pick a hot stock. They don't know you. They don't know your situation. They don't know your liquidity. They don't know your history of investing. They don't know anything about you. So they're obviously not giving you financial advice. So this is not financial advice. This is literally like a quick investment. Most of them, they have you get in and out really quick. Yeah.
A lot of them are, like day trading almost, or a weekend. Like, a lot of them now that I've seen are buy it on Friday, enjoy the weekend, and then sell it first thing Monday morning. Like, I've seen that a lot for some reason.
Really?
Yeah. I don't know why, but I have. Yeah. And so
it's
a lot of them, they think that like these news will break on these companies. So if you buy it before the news hits, and then the news will hit over the weekend, and then if you get out, after the news or whatever.
So like earnings, like buy it before earnings. I mean, I think everybody can have a good history at picking stocks, but it's never, ever going to be a sure thing ever. If it was that easy, then everybody would do it, and there wouldn't be so many subscription services, and there wouldn't be so many people advertising like on Yahoo. So there's a reason why there is so many. And like the most successful one that I probably see is like Motley Fool, and they'll try to give like a long explanation of like their recommendation, but again, it's not financial advice. They're trying to do a quick investment pick, or sometimes they're picking like dividend stocks and things like that. And again, it's not usually from licensed individuals or people that are trained to give financial advice. So just be really careful to not commingle the two because they're two totally separate things. Not financial advice individualized for you. It's a complete random trying to just pick a quick investment.
Yeah. And I think another thing, like even if they give, recommendations on a stock and it's good, they give kind of good research even.
Yeah.
Understand that their goal is to get you more clicks. So they're getting you into their, Motley Fools, wanting you to get onto their website and look at more stuff. And, they're not ultimately making money off of whether or not you make money. Again, they're making money off of the ads that they're producing by you clicking through every single one of those pages. So just beware. It's not, like Amy said, it's not individual advice. And so could you make some money on them? Sure. But you have just as much of a likely to lose all of your money on them.
Yeah. Yeah. It's really just the ones that I have seen is a lot of times it's companies that have been hammered due to like a headline, like you said, and they're waiting for that turnaround story, and so it's not evaluating a company sometimes even, it's just picking stocks that have, I call them drama stocks. So there's always these companies that are like in the headlines, or there was a lawsuit and we're supposed to get over the lawsuit, or they're supposed to get bought out, or, all this funny stuff that it's just not individualized towards you.
And I even with that, the idea that, if a stock, even a well-known stock is getting hammered, that like, oh, well, it has to turn around.
Oh, I know. And you think, sometimes you think it has to.
Certain times, depending on why it's down, that can be true.
Yeah. Well, like look at Facebook, like last year.
Yeah.
The big scandal with the information getting compromised. And, I think everybody thought like Facebook is going to bounce back right away. I know I thought it was bounce back right away. And granted, it did bounce back in a short amount of time, but it was like 8 months before it really bounced back. So if you just sit there and you hold it, or like look at companies like, I'm thinking like Teva Pharmaceutical is one that's gotten hammered, or there's big companies that get hammered and it's for a reason. Or Boeing's another good example, hasn't recovered. So you hang on to these stocks waiting for this big payoff. Meanwhile, the market is doing really well, and you could be buying other companies that have better opportunities and are more predictable and drama free. So number one was watch out for the get rich quick rhetoric, like 300% in a week. Just watch out for it. It's insane. They just want you to sell a click, and they just want to sell a subscription, and that's how they make their money. It's not individualized financial advice. And number three, watch out for scare tactics. So they will try to scare you into believing this is more for like
products.
Yeah, products.
So
like a closed-ended fund or an annuity or life insurance. They try to scare you into buying something, which is never good. You should never scare someone to buy something else. It's very one-sided and very biased.
Yeah. And those are ultimately, you're giving up control of your money in order to do a lot of those. And these companies are making money off of the sale instead of what's in your best interest over a period of time. And so those are kind of reasons why just be aware of the scare tactics.
I know,
Easy
right?
for me to say on this Friday.
No, it's not.
It's the weekend yet. So yeah, just don't be scared. Even if you are, nervous about whatever's going on, whether it be with the economy or if the stock market scares you, talk to somebody, talk to a professional that, can give you sound advice on whether it's their outlook, whether it's, what they think are an alternative to something that is like, well, I was proposed this option, but here it is. Have somebody look at it that knows what they're doing. We would love to do that for you. But if not us, somebody. Look for somebody to help you. Don't just try to navigate these on your own, because
get a couple of opinions that knows your situation and knows why they'd be recommending that for sure. Yeah, definitely. Okay, so watch out for the get rich quick. Watch out because it's not individualized financial advice. Watch out for scare tactics. And then the last one I put was their agenda. I mean, they really, which you kind of mentioned already, was trying to make money. Like their goal, they don't get paid on at least the stock ones, when they give stock recommendations, they don't get paid like per trade that you make. They don't get paid on the profit of your trade. The only way they get paid is if you buy the subscription service or if they can sell an ad on their website. So they have to, it's almost like, didn't you say before we even got on this, like, it's like marketing.
Yeah.
It's like a marketing company, and they're just trying to get you to click or subscribe to the service. So you've got to be really leery about know their agenda. Like that is their agenda, and it's not in your best interest.
Yeah, I don't think they're not one of those, even though they word them really well, they're really good at marketing. So if they've gotten you, if you've subscribed, like, don't feel bad. You're not the only one. But they do a really good job of how they word it. They make you feel like they are doing this for you and only you. Like they're looking through the screen at you and saying, this is for you.
They're really good.
They do a really good job at it.
They're professional.
But understand that they don't get anything out of the relationship with you. You know, obviously.
In fact, once you're in, they're going to try to sell you another subscription service. So like, for instance, like my client that lost a ton of money, they got her in on making like a market call. Like they asked to subscribe because they're like, we have correctly predicted the last like 3 market falls, whatever. See when the next one is. Mm-hmm. And so she pays for the subscription service. She gets in. Then they try to sell her like an equity picking service. Mm-hmm. So then we're going to pick your stocks for you and you're going to make this. Then they get her into options. Mm-hmm. So she subscribes to an options service. So they're just going to keep selling you more and more subscriptions or research. Like the other thing that these companies will try to do is send you opinions on like the market or like the economy or a certain sector of stocks, or they'll try to send you like, it looks like almost like it's research, right? But it's a subscription service, and that's how they make their money. So if you're going to do research, if you're going to stick with a research company, stick with the big ones, you know, like the Reuters, the Morning Stars of the world, like the ones that are reputable and big. Don't just go with a random email or an ad that you saw. Yeah.
And understand that, you know, especially in those subscription emails, they're, even if they look like research,
Beyond Meat reported.
Yeah.
Did you see it?
Yeah.
It's good.
They're biased. You know, think of it like the media. You know, everyone has kind of an agenda, and so even if it looks like research, and you could probably even look it up, and it might back up that research.
That's true.
But it's still understanding that their ultimate goal is not you; it's them. And so find somebody that's goal is you.
That's true.
And so that means that they have your best interest in mind, which is called a fiduciary. And so find somebody that is going to look out for you no matter what. And they are held to that standard. Those emails are not held to that standard.
They're not liable, by the way, if they, for instance, email you a recommendation to buy today, and tomorrow they email you to sell. And you didn't get the email right away and you don't sell and then it tanks, they're not liable for that. Yeah. Like, so they're not, it's just, you know, I will say the one good thing, like I said, is the research piece of it. Like if you're trying to educate yourself, you're trying to research, that's different. But if you're trying to take actual recommendations of what to buy and sell, that's when it gets dangerous, because I've just seen people lose so much money. Yeah. So I don't think I have anything else.
Yeah, I think that's it.
18 minutes. So 4 of them. So get rich quick schemes. It's not individualized advice. They'll use scare tactics, and also their agenda is to make money. They're a marketing company. All right, guys, have an awesome weekend.
Have a good weekend, everyone.
Have a good weekend. We'll see you next week. Will I see them next week? I'll have an interview next week. See you next week. Bye.